Good morning, Bahamas, and
Good
happy
morning,
Mother's
Howard.
Day to everyone, all the mothers out there. Go ahead.
Good morning, Bahamas and Barbados. Happy Mother's Day to all of the mothers that are joining us today, and of course to all the other ladies. We wish everybody safety during this time that we have this pandemic. So, um, I'd like to introduce myself and also my colleague. My name is Paulette Lozake. I am the manager of investment advisory services here at Royal Fidelity. And today we're going to talk about the options that we have available for persons wanting to invest during this time. We're going to talk about um, budgeting during this time, as well as we're going to talk about the experiences of mothers and investments that's available for them. And I'm going to introduce to you today Ms. Tishria Gray Johnson, who is a new mother and a wife. And she is going to share from her experience as a new mother and a wife when it comes to investing. And she's very, very, she's brilliant. She's an expert in her field. And she is a pleasure to work with. So take it away, Tish.
Thank you, Paulette. I don't know how to speak after an introduction like that. I hope I don't let you down. Again, good morning. Um, so, like Paulette said, I want to talk to the mothers, to the women, but mostly to the mothers this morning. Um, First things first, as a mother, we are the main caregivers. Um, Even if you're married, it's you who, does you're the one who does the majority of the work when it comes to taking care of your children. And you know that because they would walk over daddy to come find you to tell you, I'm hungry. So we're the ones who, take the brunt of it. And you're not only caring for children, you're caring for your partner, you're caring for your elderly parents. So as women, we give and we give of our time, of our energy, of our money. And at the end of the day, sometimes what happens is we neglect ourselves. Okay. And if you give all you have to give, you're no good to anyone at that point, not even yourself. And so, we need to focus on the, I know it's easier to say than to do, but we need to focus on not neglecting ourselves as much. And what happens too is we feel guilty. We feel guilty when a loved one has a need and we're not able to assist. And it causes us to make what I call reckless decisions, like saying, hey, let me go and get into debt. Let me borrow so I can help with this hospital bill. Let me borrow so that I can pay for my child's education. And, the one piece of advice that I want to give, um, and I'm going to tap into the education portion of it, is that if you have a low income as a mother, as a woman, if you are a single mother where maybe only your income is the only money coming into the home, my advice to you is to focus on retirement. If you have to choose between retirement and education for your child, retirement. And I know you say, what? That sounds harsh. What do you mean? I got to take care of my kids. Of course you do. But the thing is, kids have options for college. They can get a scholarship, they can take out a loan, they can work. I work and went to school, and I did fine. I think it made me better, stronger. But you don't have a scholarship for retirement or a loan that you can take out for retirement.
True.
So my advice is to put aside for yourself because, and this is my last thing, when you retire, the reality is the only money you have is whatever you saved and what NIB gives you every month, which we all know is nothing much. So think about that. And I know it's rough. We're all in this together, especially like for example with COVID, the COVID-19 pandemic. a lot of persons' income were drastically reduced, and I am no different. I work based on commission, and sales are lower, and so I had to adjust my thinking and my budget to say, hey, you can't spend like you used to. So, that being said, I'm going to turn it back over to Paulette, who's going to talk about uh, investing for the single person and the person who is single again. So, Paulette, if you would, please.
Sure. Thank you so much, Tish, for sharing, and thank you for sharing from your experience. For the single woman, I remember when I was single before being married. I'm divorced. And I remember there were persons who I was close to, or family members, who would say, hey, I need you to do this. I need some money from you. You don't have any responsibility. You don't have any children, so you don't have a responsibility. So you could help us. And that is a very prevalent thought here in the Bahamas. And it's not necessarily a healthy thought. So for the single woman, the difficulty for us is to say, I'm unable to do that at this time. And we need to be able to put money aside towards our retirement, put money aside towards our education. For some of us, we want to go back to school. For the woman who is single again, the responsibilities have now doubled, particularly if there are children, and the income has now been trimmed in half in some cases, or even lower if the husband was making more money. And so most women have to rebuild their financial future. They have to rebuild their finances. And myself, I had to do that. And so when it comes to our budget now, for us single women, we now need to put money aside towards retirement, very similar to women who are married and with children. But we, particularly the single women, we can save and invest a little bit more than normally. Now, you may say at this time, a lot of us have in some cases lost our jobs. In some cases our income has been dramatically reduced. You can invest. You can start investing with as little as $100 a month. And I know somebody who gets national insurance, and that's all the money they get. It may not be a lot, but she has made a decision to be disciplined. And she started saving $5 a month, and then she was able to graduate to $10 a month, $20 a month, and now she's graduated to $100 a month. And she is now able to invest. Now we have funds and investment vehicles here at Royal Fidelity, and as well as the general public, that you can invest $100 a month. You don't need $10,000 to invest. You don't need $5,000 to invest. And that's good. It's good if you have that money to invest, but you can start with as little as $100. The other important thing for women who are single and single again is that we have to, I know one of the situations I fell into was, I gave very generous gifts to my significant others. And my motive was because I wanted, of course, the romance, I wanted the affection, I wanted the attention. And in the end, when the relationship ended, I was still out of that income or out of that money. And what I needed to do was I needed to save and I needed to invest those monies. And so I've learned some very important lessons. And the challenge too is, we want to lend money or give money to our significant others. I've done it. So I'm not here to judge anybody. A lot of the things that I share, it's because I've done it. So For the single women, we also have to choose who we're going to allow in our circle. Who are we going to allow to be our significant other? Is that person disciplined when it comes to finances? Are they disciplined when it comes to living extravagantly? Do you talk about the budget? Do you talk about the expenses and the bills? Those are very important conversations to have. And also the behavior. The other thing is we also have to be very careful who becomes our confidant and who we have children with, because that will determine how your finances is going to go in the future. Is that person going to be responsible when it comes to helping with the bills and the responsibilities when it comes to the child? And there's some persons who they've been left with the responsibility of taking care of the children, so that would be my advice to single women, again. The biggest thing that women struggle with here in the Bahamas is taking care of themselves before they take care of everybody else. We take care of everybody else, myself included. And luckily I have friends and I have my colleagues who hold me accountable to being responsible with my own investments. So I want to shoot it back to Tishria at this time, and she is going to talk about our educational investment fund, and she's going to pull up a slide real quick for us to view with her.
Okay. We're going to give them a moment to pull up the slide. Okay, here we go. So, our education investment account. Before I go through the mechanics, I don't want to go through too much of the mechanics of how it works. I just want to say that a little bit goes a long way with investing. You may feel like I only have so much that I can put, but whatever you are able to put, you put it. You know where you are, and where you are is fine. You don't have to keep up with anyone. You don't have to worry about anyone else. This is where I'm at, and this is what I'm working with. Mm-hmm. So a little bit does go a long way. And then the thing is, the earlier, the better. So, of course, if you started the fund as soon as you had your child, you had a longer time to build up an education account. But that is not to discourage anyone who maybe that child is already a little bit older. That's fine. Still start if you're able to. You may not be able to cover the entire expense of a college education, but definitely you'll be able to supplement it. Maybe, pay for room and board or books, or you'll be able to assist your child. Okay? So, basically the cost of education, as I'm sure you are aware, is constantly going up. Every year it gets a little bit higher and higher. And right now, they figure that overall the cost to attend a college is about $43,000 a year. This is in the US. And if you go to a college in the state where you live, it's about $22,000 a year. So it's costly. So if you look at the screen here, at the bottom, it gives you an example of what the yield would be on placing $500 every month into an investment. And, they show you a 3% return or 5% return. So if you look at 10 years, if you're putting $500 in every month, for 10 years, you're looking to have about $77,641. And Paulette is going to touch on this in a minute, but we do have investments here where you can earn 4.5 to 5%. So these are not crazy figures, because I know a lot of people are like, well, where is this coming from? Because the banks are paying 0.001. Don't worry, we're going to cover that. So it just shows you over time, you're able to really build a real nest egg there. Now, our EIA program starts with $2,000. That's the minimum investment. And then you do a monthly contribution of $100 a month. Of course, if you can do more, you do more.
Mhm.
But this is a good place to start. This is a good place to start if you're looking to assist your child with their education. I think that's it, Paulette.
And if we can just pull up the slide for the investments that we have here at Royal Fidelity, that would be great. Okay, so we have here at Royal Fidelity, in the Bahamas as well as Barbados, we have our more conservative fund. In the Bahamas, it's called the Prime Income Fund, and in Barbados, it's called the Premium Income Fund. And the 12-month return that we have for the Bahamas is, sorry, I think we have the figures inverted, but it's for the last 12 months for the Prime Income Fund is 5.12%, and the Premium Fund in Barbados is 0.9%. And when you compare that to what you would receive at the banks at this time, that's a huge difference. And minimum to invest in our Prime Income Fund is $1,000, and if you want to add on a monthly basis or any additional investments, it's $500 after that. And so it's very conservative. It's very similar to a bank account. In that fund, there are local Bahamian bonds, whether they're government bonds or corporate bonds, and preference shares. So the underlying investments are fixed income securities. We also have here at Royal Fidelity our moderately aggressive fund, a moderate fund really, and it's called the Secure Balanced Fund. In Barbados, it's called the Select Balance Fund, and the return for the last 12 months for the Secure Balance Fund was 9.84%, and the Barbados Fund, Select Balance Fund, is 5.25%, and that fund, it's a balanced portfolio of Bahamian or Bayesian bonds, preference shares, and also equities. So it's a 50-50 balance. And so you have the security and the safety of the fixed income securities, and then you have the opportunity for growth with the Bahamian equities or Bayesian equities. We also have our targeted equity fund, which is our moderately aggressive fund here in the Bahamas. And in Barbados, it's the Strategic Growth Fund. That fund invests primarily, but both of those funds invest primarily in the local equities for the Bahamas, local equities for Barbados. And the return for the last 12 months was 7.61% and 1.6% for the
Premium income.
Well, I think the figures are a bit inverted, or maybe not. Yeah, no, it's a bit inverted. I think
well, our side is inverted, but the figures for Barbados, they seem to be in the correct slot.
Okay, all right. So those are the funds, and you don't need a lot of money to invest. For the Secure Balance Fund, minimum $1,000 to invest or $500 additional. But the Targeted Equity Fund, if you have very little money, very little income, and you want to start your investment journey, you can start with as little as $500 in the Targeted Equity Fund and $100 a month. And I know that I can personally spend at least $100 a week, every 2 weeks, on fast food. And so if we you want to say something, Tish?
No, go ahead. Go ahead.
Yeah, so if we decide that we will sacrifice some fast food or sacrifice some coffee, we are able to save that $100 and then invest it. So
okay. I did want to make a correction.
Okay.
The return on the balance fund for Barbados It was actually supposed to be a -5. I don't want to give the wrong information to the public.
Okay.
And then also we have some questions coming in.
Yes.
So
No questions.
the first one here is from Calvin Rule. Hi, Calvin. In the current economic climate, do you still believe it is a good time to invest? So I would say yes. Bahamians were very conservative by nature. So we grew up with the savings deposits and the fixed, the savings accounts and the fixed deposits. But the typical investor, when prices are dropping, when you're able to get in, this is when persons buy because they have the anticipation that the markets will turn around and will come back up. And in this case, the markets aren't dropping because of a financial crisis. It's dropping because of an external crisis, a healthcare crisis. So once we get this under control, persons will be employed again. Persons will start traveling again. The market will go back up. I'm personally trying to invest in some U.S. stocks. I'm trying because it's so low. So yes, my answer is definitely this is a good time to invest. I don't know if you want to add anything, Paulette.
Yeah. Also, for persons who want to invest in U.S. funds or invest in the U.S. market, Royal Fidelity does also have USD funds, Bahamian dollar to USD funds, so you don't have to go through central bank to convert your US dollars. Additionally, and it's a low entrance to get in. It's $2,000 as opposed to having to find $10,000 or $3,000 to invest in the US. We also have some other questions. I have a question for Tish. I'd like for you to answer this question, Tish.
Mm-hmm.
If I'm married, should I open an account with my husband?
Okay, so this is a hot topic, I'm sure. I wouldn't be surprised if the comments start flying in right now. But it's every individual is different. Every couple is different. Okay, like the old people say, I don't trust them as far as I could throw them. So if you feel like that about your partner, you probably would be saying, oh, definitely not. I'm not putting anyone on the account. So like I said, it's the individual. If you are a spender, you like to spend money, but your husband or your significant other is thrifty. They like to save. Then maybe for you may say, okay, it's better if I put them there because they'll help me, be accountable. And then it may be the reverse. You might be the saver, and the other person is a spender, and you don't feel comfortable, putting them there. So it's all up to the individual. It's all up to the couple. And then you have some persons who say, well, I'm going to do something with my husband or my partner, but I'm going to do something separately for myself. And so, that's their option. So you do, there's not one cookie cutter answer for that. You really have to evaluate your life and who you are with and who you've associated yourself with, and then make a decision.
Well, I can share personally from my experience. So I'm divorced, and when I was married, my ex-husband and I, we had a very different outlook on finances. I was the saver, but he was the spender, and that was just the way he was brought up. So it doesn't say that he's a bad person, or it doesn't say that he was wrong in his way, but we had very different outlooks when it came to finances. So what we ended up doing was we ended up keeping separate accounts, and then we would pull together our investments, or we pull together a portion of our income to pay the expenses and the bills. All right.
Okay. There's another question here from Dallas Bennett Roll. How late is too late to start a retirement plan or an education plan? What do you think?
Hmm. Well, it's never too late to invest. You know that you can save. If you have money to save today, you save it. I do recall. I remember having a situation where a lady, she had just 1 year to retirement,
Mhm.
and but she'd already paid off all of her debts, paid off her mortgage, paid off all her loans, and etc. And at the time that she came out, we were able to start her investment plan. She needed to invest heavily, to get to a place where she can live comfortably, during her retirement. But she had to. It was very challenging, But she bit the bullet, and she made herself save and invest a good portion of her income. Okay.
Okay.
So today you have today. We can do we have what we get today. Okay.
Yes.
I have another question. Oh,
Mm-hmm.
you wanted to say something else,
No,
Tish?
no, please go ahead.
Okay. Um, what do you say to someone who tells you they want a high return, but they don't want to take any risk?
So, Paula, you and I get this
All
comment
the time.
very often.
Yeah.
I would have to say that that doesn't exist in the investment arena.
Mhm.
Risk and return are a definite trade-off. If you want a higher return, you have to take on a little bit more risk. You have to invest in stocks. You have to invest in things that don't necessarily have a fixed income attached to it. And then if you feel like that's not you, you don't want to take on that risk, then you would have to be comfortable with accepting a lower rate of return. Uh, Definitely, it'll be more than the bank is paying right now, but it wouldn't be. Sometimes we in the double digits when it comes to equities.
Mhm.
You wouldn't see that in a conservative fund.
Mhm.
But I always tell persons, you know your risk tolerance. When you come to meet with us, we go over what your objectives are. What are your plans for this fund, for this investment account? So, based on all these answers, based on your age, based on a lot of different things, we decide. But definitely, if you want the higher returns, there's no other way than to take on some risk. So, Kristen Wiley wants to know, do you expect any of the bond portfolios to be affected by COVID-19?
Okay. So I'll answer that.
Okay.
So when we're looking at a conservative portfolio or conservative investment, we're looking at uh, investing so that whether there is a crisis like we're in now, or times of good of plenty, we get a specific uh, range of return. Okay, and so bonds tend to be invested. Well, bonds tend to be very uh, the interest is a fixed interest on that particular security, and there may be some effect, you know, particularly with corporate bonds. These corporate bonds are companies that are in business. If these businesses are unable to earn an income, they may have a struggle or have a challenge paying um, the the interest on that particular bond. So we may have a slight effect, but it won't be as drastic as our aggressive portfolio. Okay. Um, there is okay. We also have some email questions. I hope that helps.
But,
Um,
but, but before we go, Paulette, there's one
mhm.
more live comment question. So I just want to get hers, and then we could go to the email portions. I don't want to leave her out. I
Oh,
get the Bethel. She wants to know, is my government bond investment safe during this crisis? And how will she know to adjust her portfolio to a more secure portfolio?
thank
So,
you. Thank you, Agatha. That's a very good question. Go ahead, Tish.
Um, well, government bonds in general are safe, what we call safe conservative investments.
Mhm.
Very rarely a government would default on their bonds. They would probably borrow before they make an announcement that they're unable to pay you back for the
Mhm.
money that you lent them.
Mhm.
So during a crisis like this, I don't see your government bonds being at any risk. Slowly but surely the country is starting to open up. Um,
Mhm.
uh, we have businesses now operating. So I don't see that announcement being made. Um, when to know to adjust your portfolio? Um, Investments are long term. So definitely a crisis is not a reason to automatically make an investment change.
Mhm.
Because if you're talking about retirement, based, based on how old you are, it may be 10 years away, 5 years away. And so during that time, you expect the market to go up and down. Um, so an initial 1 month or 2 months or a quarter being low is not a reason to go and change your portfolio. Um, so it's really up to the individual. Personally, if I see maybe a full year, 6 months to a year of decline, I may say, okay, maybe I need to reevaluate. And in general, the older you get, the more secure your portfolio should be. That's in general, crisis or not. So
Mhm.
the typical rule is you base it on your age. So if you're 60% of your investment should be in something conservative and 40% in equities. So it's based on age. All
Okay.
right, you want us to do the email questions?
I actually have two questions that came in.
Oh,
Um, I'm going to make it real quick. I think one of them was answered already. One
okay.
question is from Marcia Hankovsky. Her question is, what do you recommend for short-term and long-term investments?
Mhm.
Do you want to take that?
Okay, short term. Short term is anything between 1 to 3 years. Now, I used to tell persons that that is where you would put money in a savings account, anything you want to do within a 1 to 3 year period. It's a little bit harder to say that now, of course, because the banks aren't paying anything. So you may have to take that money and put it into a conservative investment to get something at this point.
Mhm.
But I'm going to talk from a general standpoint. 1 to 3 years is short term, and you put it in something like a savings. Anywhere from 3 to 5 years is considered medium term. And anything you want to accomplish in that time frame should be put in a fixed deposit account. Anything beyond 5 years is what we consider long term and is what should be put into an investment account. Um, so that's the 3 points right there.
Right. Now, because we, of course, now with the banks not paying a very good return, we
Mhm.
have investments here at Royal Fidelity that you would be able to earn a decent return within a 3-year period.
Yes.
Would recommend, in all honesty, to bring your investment here at Royal Fidelity if you're going to need it within a year. You will pay redemption fees. Here is another question from Marcia. Where and what type of investment yield higher interest rate than banks offer at this time? I'll answer that. We here at Royal Fidelity do offer rates that are higher than the bank,
That's true.
as we discussed earlier. So I
I
think there.
want to,
Go ahead.
sorry, I really want to touch this question here. You were talking about single women, and so
Yeah.
I want to give this question to you. This was emailed by Simone Smith, and she's asking, I'm going to put it in one, what guidance is available to new female investors? And then she also wants to know, how can we rebuild many of the women now who are hurting and out of work?
Okay.
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 So you want to take the first part where she's asking about what guidance is available for new female investors?
Sure, sure. So when you come here at Royal Fidelity or you call, we have investment advisors who will sit with you for free, go through a budget with you, and come up with plans or a plan that works for you.
Mm-hmm.
Generally, what I suggest for women who are just starting out, particularly with jobs, if you are not paying rent, I recommend that you save anywhere between 25 or invest 25 to 50% of your income. When I started working many years ago, I was paying rent and I was able to save about 75% of my income. So that's what's recommended. We'll save and invest. And of course, the younger you are investing, the better. Even for my salary, I remember for 1 year being able to contribute one half of my salary to my pension. Now, of course, not everybody is able to do that. We have responsibilities, um, but the more that you can save now, the better. Okay.
Right. And as
Mhm.
far as rebuilding, the women who are hurting, the women who are out of work, it is just literally one step at a time, one block at a time, just like you're rebuilding a home.
Mhm.
So you just work with where you are. If your immediate need right now is feeding your family, keeping a roof over their head, we're giving you wonderful advice, but that's not for you right now.
Mhm.
You focus on where you are. And then as you're able to do so, then you would say, okay, I am going to go ahead and then you say, I'm going to go ahead and start a savings plan. Then I'm going to go ahead and start an investment account. But you just rebuild one step at a time,
Mhm.
and that's just life.
Mhm.
Things come, they come and knock you down, sometimes take the wind out of you.
Mhm.
And you just have to get up and say, okay, how do I, start over?
Mhm. Mhm. Well, I was one of those women who had to rebuild.
Hmm.
And in my first year, I literally had to spend money to take care of my extended family that I, lived with. And so at that time, we needed to be able to eat. We needed to be able to pay our mortgage at that time. Thank God it's finished, it's paid. Um, but that's what I had to do in that first year. And then after that, I was able to start saving my $5, my $10, my $20, and then my $100. And in cases later, I was able to save more. Okay. We have some more questions. I mean, these questions are just fantastic. But I'm not sure we're going to be able to get to all of them.
Right.
I do have one more question from Nurse Renisha Burrows. Thank you so much for watching. She asks, okay, I think we answered it. How does a central bank offering work? You can take it if you like.
Oh, okay. Yeah, that's fine. Um, when a government or a company issues a bond, essentially what they're saying is, I need to borrow some money from you. Let me borrow this money, and every 6 months I'll pay you interest. And then when it matures, I'm going to pay you your money back.
Mhm.
So that in a nutshell, that is what you're doing. You are lending money to the government. They give you a bond in return, and every 6 months they pay you, and then it matures, and you get your principal back.
At the end of maturity. And guess what? It's only $100. It's
Yeah.
only $100. All right, so we have a few questions. We're gonna get to these questions. I have Okay, I think you answered this one already.
Okay.
Oh, this is for you. How does family planning fit in fit in with financial planning and investing?
Okay. So, um, the thing about it is, with family planning, you need to decide how many children you. Well, first of all, do you want children? How many children do you want? Who do you want to have these children with? So it plays a huge factor because income and resources are limited to whatever it is you make, and you have to use that to take care of that family. Okay. And then, depending on who you may marry someone with wealth. You may not marry someone with wealth. You may find out, hey, this man doesn't like to work and I have to do the majority of the work. It's a lot of different things to look at, but with family planning, um, you need to seriously consider, especially the younger single women who may not have children as yet, um, when you want to have these kids and how many. Because if you do it too soon, and it's not saying that you can't move forward in life, of course you can, but it's a little bit harder to do it with a little one or two little ones, that you have to take care of. So, you know, try to establish yourself, who you are. What are your goals? What are your purpose? What is your purpose? What do you want to do with your life? Find your own identity, a person, even before you, think about tying yourself up with another person in marriage. Um, it does play a role, and when you're young and coming in, I think these are the things you need to consider.
Yes, that's a great answer. Thank you. We
Mhm.
have a live question from Ramona. Um, she said, if there's a woman that's widowed and still working, okay, sorry. Ramona is widowed and still working. She is 5 years from retirement. What portfolio would you recommend for her? Thank you, Ramona. That's a great question. I can take it.
Oh,
Tish.
okay.
You have 5 years to retirement, which means if you are getting a monthly income, you have 60 payments now to receive before retirement. And out of that 60 payments, my recommendation would be to take as much of it as you can, and invest. Of course, pay your bills, pay your expenses. The portfolio we'd recommend for you would be moderately conservative to conservative, because at this time we want to preserve as much of your principal as possible. So moderately conservative in that case would be maybe 25% of your investment in our secured balance fund, and perhaps 75% of your investment in our prime income fund. So that would be my recommendation. You have another question, Tish?
I think we're actually done.
Out of time. Oh no.
Yeah, we're done. I'm sorry if we didn't have time to get to your question, but hopefully this whole session has been helpful. And I know Paula is going to close, but I just want to reiterate that Royal Fidelity does have options for persons out there. A lot of Bahamians are still making nothing on huge deposits, on small deposits that are just sitting in the bank. And why make 0.01%? Not because I'm working an employee of Royal Fidelity, but thinking logically, why should I make 0.01% when I can come and look at an option where I'm making 4% or 3%, So really think about it. We're here to assist and help as much as we can.
Right.
Thank you.
Well, thank you, Tish. Appreciate you sharing. Thank you, Barbados. Thank you, Bahamas, also for joining us. Like we said, we wish all the mothers a happy Mother's Day.
Yes, happy Mother's Day.
And we wish everybody safety during this time. At Royal Fidelity, I am a certified financial planner. So I do meet with persons and assist with budgeting and coming up with a plan for your investment. And all of us at Royal Fidelity who are in our advisory department, we're able to assist you with that. So we look forward to hearing from you. We look forward to seeing you. You can email us. Our emails are on the screen, and we tend to be responsive within a day or two. but we're looking forward to hearing from you. Thank you so much for joining us.
Goodbye.
Bye-bye.